The multiple is the output of a much deeper story. It reflects the quality of the business, the durability of the revenue, strength of the team, the growth runway, the competitive landscape, the conditions of the asset. We saw a significant reset and a pause in car wash consolidation, and a lot of platforms and sponsor-backed groups redirected their focus from growing unit count to operational excellence. No two businesses are valued the same way. So a big part of the focus for the remainder of our conversation as we move on here today are what metrics matter and how do you command a premium multiple in today's marketplace. Again, there are a lot of groups out there that, in our opinion, are spreading a lot of falsehoods in terms of how businesses may be valued. And what we want to do today is provide that depth and really separate kind of where the market is versus how buyers think about your business and what that means in terms of extrapolating greater value. My name is Jenks. I'm a partner with Amplify Capital Group, and thank you for joining today for an in-depth episode of Behind the Business. Really excited to spend some time with you today talking about a topic that is highly relevant to owners, operators, investors, lenders, and anyone else who's trying to better understand where the car wash industry is headed. What actually moves valuations in today's M&A market, and what metrics matter most for increasing valuations. So today, the title of this presentation is What Moves the Multiple, Metrics and Trends Driving Car Wash M&A. And that phrase is intentional. In our industry, people often talk about multiples as if there's some sort of fixed magical number, and if every car wash business is worth a certain number based solely on EBITDA or location count. But in reality, the multiple is the output of a much deeper story. It reflects the quality of the business, the durability of the revenue, the strength of the team, the growth runway, the competitive landscape, the conditions of the asset, and the confidence that the buyer has in the performance they are underwriting today will continue and ideally grow over time. So over the last 7 years, the car wash market has gone through a dramatic evolution. We saw a period of rapid consolidation, aggressive capital deployment, elevated valuations, and significant new development within this space. More recently, the market has become more selective. Buyers are still, in fact, active, but they are definitely more disciplined today. Capital is still available, but it's being deployed with much more selectivity and overall a lot more discipline. And the difference between an average asset and a premium platform has become much more pronounced in today's market. So that's really what today's value discussion is all about here. We're going to look beyond headline multiples and talk about the specific metrics and trends that influence value. Things like membership penetration, churn, revenue per car, labor efficiency, site level margins, market density, all factors relevant today to understanding what's the value of your business. So for owners, my hope today is that the session helps you better understand how buyers think, what they prioritize, and where you may have opportunities to strengthen your respective business before considering a transaction. For investors or lenders in this space, I hope this provides a clear view into how quality is being assessed in the current market. And for operators, whether you're actively thinking about pursuing an M&A or not, these are the same metrics that generally separate stronger businesses from weaker ones. And if you're not currently in the car wash industry and are wondering why you're seeing all these car washes popping up all over your town, this will help you understand why. So one important point I want to make at the onset here is that this isn't just a presentation about selling your business. In many ways, the same things that drive value in a transaction are the same exact things that drive better operating performance every single day. So a cleaner financial story, stronger recurring revenue, better site execution, disciplined labor management, higher customer retention, and capable leadership team all create value. So whether you sell next year, 5 years from now, or never, and you just cash flow your business, highly relevant topic today. So as we go through this, I encourage you to think about your own business or the businesses you work with and ask, where are we strong? Where are we exposed? And what would a sophisticated buyer investor see if they looked under the hood today? So with that, let's go ahead and get started. A little bit of an introduction to Amplify Capital Group. Amplify, we're a boutique M&A and capital advisory firm with deep specialization in the car wash sector. So while we do represent clients across a wide array of different sectors, we do have deep vertical specialization within the car wash space. And we built our firm by combining Wall Street transaction experience with real operator perspective. I myself am an owner-operator of 6 car washes here in the Chicagoland market, and that really helps us understand this space with deep intimacy. So we know how to talk the talk and walk the walk. In our track record, we've closed over $5 billion worth of transactions, specifically in the car wash sector, including several of the most significant deals in the space today over the last 5 years. And what we're going to cover today isn't just academic or theoretical advice. These are metrics, structures, and valuation conversations that we work through in live deals every day. This isn't AI driven, right? This is real practical insights. And our experience across the space gives us a real front row view into how buyers are underwriting the sector today. So most of what we'll cover, again, not theory. These are numbers, questions, and deal structures that we negotiate every day on behalf of the owners and operators that we have the pleasure of representing. So a little bit of what we do. We do support clients across the full continuum of solutions. That includes sell side, buy side, capital raising, partnerships, operations advisory, venture capital, and brokerage. And in car wash, that matters a lot because value creation doesn't just happen at the point of sale or transaction. It is long before that. So a full exit is really just one of many options. We could help assist our relationships, our clients with recapping their business, whether it be reforming their debt for growth or bringing in some minority equity, participating in joint ventures, selective monetizations, which is increasingly relevant in today's world, as well as the need for liquidity is very real. But the best outcomes usually happen when financial strategy and operational performance and real estate strategy are all aligned. So we are often known as just the deal people in car washing, but the reality is we do a lot more than that. We've helped incubate some of the most innovative solutions in the car wash space today with our partnership, the like of AMP memberships, Retention Express. And the reason why I want to highlight this is this gives us a real full 360 view of the car wash sector beyond just the transactional side of the business. So first, level set today. So before we start jumping into the metrics that do matter, I really want to level set on where the market is today, where we've been, and cover kind of where multiples are, who the active buyers are, and what's really driving deal flow. All right, so looking at some notable transactions as of late here across the car wash sector going back to 2021. And really, the logos matter less on this page than more of the shape of the volume. And what we saw in 2021 and 2022 were record years for car wash consolidation. 2021, we saw approximately 63 transactions representing 391 car wash sites in terms of transactional volume for the year. And as you look ahead to 2022, you see that number balloon. 102 transactions across 521 units. And this is really the pinnacle of car wash consolidation. What you saw then in 2023, 2024, all the way through the first half of 2025 was almost a reset and a pause of car wash consolidation. And a large reason for this was really kind of the cost of capital environment, right? 2022 going to 2023, we saw the Federal Reserve start to tighten by way of increasing interest rates to combat rapid inflation. And as a result of that, just coupled with the sheer volume of new units coming online, as well as some stress in the marketplace with the likes of Driven Brands divesting their Take 5 car wash portfolio and ultimately Zips emerging from Chapter 11, we saw a significant reset and a pause in car wash consolidation. And a lot of platforms and sponsor-backed groups redirected their focus from growing unit count to operational excellence. And as we look in 2025, in the second half of the year in particular, we saw a reemergence of car wash consolidation, largely fueled by the restoration of bonus depreciation by way of the One Big Beautiful Bill Act. So looking back last year, 2025, we saw a pickup, 51 transactions across 663 sites. And as you look over to the right-hand side of the page here, you see a big driver of that was Whistle Express, formerly known as Magnolia, acquiring the Take 5 stores from Driven Brands, 383 units. So a significant portion of those 683 sites trading hands last year were largely attributed to the Whistle acquisition of the Take 5 stores. Now, as we flash forward to 2026 here, you may note at the top of the page here, proud to announce a recent transaction here that Amplify was a participant in, representing Canton Car Wash through the acquisition by L Car Wash. And this really marked, an expansion and entrance into a new market for L. And I think it's just the ultimate proof statement that high quality transactions are still getting done in today's world. But the key takeaway here is that discipline is back. So it's not competition for assets just for the sake of building unit count. It's competition for quality assets. And that's precisely what we saw here with the L Car Wash acquisition of Canton Car Wash in the Baltimore market here. Good businesses are still getting strong attention. but just the market is a lot more selective today than they have been historically. All right, looking at multiples over time. And one of the clearest valuation patterns as we look across this board here kind of coincides with that previous page as we saw kind of that increase in deal activity over 2022. This was definitely the peak of multiples here. So we're looking at this page as we're breaking out average multiples for 4 sites or fewer versus greater than 4 sites. We're going back to 2020. And we'll see here, smaller chains represented by 4 sites or fewer. These are typically what we'd consider bolt-on acquisitions, have averaged around 10.5x EBITDA. Portfolios with more than 4 sites have averaged roughly 13.2 times EBITDA. And again, as mentioned here, as you look at 2022, we saw this is really kind of the height of valuation multiples with average transaction representing 4 units or more hitting roughly 17.5 times EBITDA. And we've seen valuation multiples have moderated quite a bit from this peak here. And, really want to highlight here, I think a lot of groups, have in their mind, hey, I'll wait to sell or entertain selling my business once multiples recover to those 2022 levels. Well, you may be waiting a while here. Something we often talk about in the marketplace is, the reality is 2022 is really the exception to the norm. If you look at that long-term average, again, 4 sites or more hovering around 13 times EBITDA. If you look at where we've been the last 3 years, we're back to where normal has been historically. So a little caveat there, if you're expecting multiples to recover to those 2022 levels, that may not happen. But nonetheless, as we look at kind of the spread between sub 5 sites versus 4 sites or more, there's a pretty consistent spread of about 250 to 300 basis points in a premium. And that premium just isn't simply about size. It reflects what scale enables, right? Which is denser operations, stronger management infrastructure, better customer acquisition strategy, and just overall more strategic relevance to buyers. So in other words, scale is valuable when it produces better, more defendable economics, and it's not just necessarily a free lunch for being large. So you see that pretty pervasive spread across time here. But the reality is here, we get asked this question all the time. We're at valuation multiples today. And, I think what a lot of groups will tell you may be a little bit misleading, right? Because the reality is no 2 businesses are valued the same way. So a big part of the focus for the remainder of our conversation as we move on here today are what metrics matter and how do you command a premium multiple in today's marketplace? Before I wrap up on this slide here, the last point I want to make here is 2026, the comp set that we're using here. This would include both completed deals as well as deals that we have visibility into that are currently under exclusivity, so have yet to close. And, the one thing I do want to highlight here is that, we are seeing a lot more asset-light transactions in which the real estate would not be included as a part of the deal. So we are seeing a little bit of a shift where historically, a lot of the multiples that we're using are EBITDA-based multiples, where we are seeing a greater composition in our data set of EBITDA, meaning that the real estate is not included. And do want to highlight that because that's one very important caveat because you generally see, about 2 to 3 turns in a premium on multiples for EBITDA versus EBITDA in which the real estate is included as a part of the transaction. But again, don't want to focus too much time here over where multiples are at today, because again, there are a lot of groups out there that, in our opinion, are spreading a lot of falsehoods in terms of how businesses may be valued. And what we want to do today is provide that depth and really separate kind of where the market is versus how buyers think about your business and what that means in terms of extrapolating greater value.